What's going on, guys? We're looking at the triple Q's weekly time frame, and I'm going to show you why the bottom is not in yet, why so many people love to try to time the bottom. But let's just kind of take a look at the macro overview. If you guys enjoy videos like this, technical analysis, levels to day trade to swing trade, so forth and so forth, subscribe to the channel. Leave me a comment down in the comments below that you guys subscribed, and I'll reach out to you guys, show you guys my appreciation for that. With that kind of being taken place, I'm going to go back here and look at December, January, that highs of $408.71. You can see as we started this year of 2022, we had a little bit of consolidation going sideways where we dropped all the way down to prices of around 378, tried to pop back, but never made an actual new high. So we have our first leg down here, followed by our 3-week aggressive rally. I remember this time it was the middle of March, and this was a fantastic rally going back long. One thing that everyone was kind of looking at here was if we could reclaim the 50-day moving average, which we did on this week here of the 28th of March. If we could start building over this area, get back into this upper channel, that would have spelled for an aggressive rally back up to the upside to take out the all-time highs and just continue trending higher. Obviously, the following week, we were rejected at the 50-day moving average, put in our next big leg down here, followed by a rally, followed by another leg down, followed by a rally. So one thing that I do want to point out, if we take these highs, right, and then we had our nice drop, here's our rally, and then a nice drop, here's our rally, another drop, here's our rally. All we are doing is taking a staircase down. So if the narrative kind of plays out, what I'm looking for on this push is 277, okay? So 277 is going to put us right here at the 200 EMA. Now, one thing that I want to point out here, we were rejected at this blue line. This is a 10-day moving average on the weekly time frame. You can see here when we caught this 277, 200 EMA the last time, we rallied very, very aggressively into this zone. Once we took this out, we were rejected at the 10-day moving average. So if we do come down here again to 277, hold, bounce, in order for us to really start calling the bottom, we need to get over this line here. Okay, that's 353. That's the 50-day moving average. Before anyone is going to look like a genius and say that the bottom is in, the Qs need to get over the 50-day moving average. Okay, there is no ifs, ands, or buts about it. So, to be able to say that the bottom is in is not even going to be for at least another 2, 3, 4 months after the bottom is in. So you're never going to actually time it unless you just happen to get lucky and you're buying on every new low. Okay, eventually you keep buying every new low, you're going to get lucky and you'll be able to say that you're a genius and you call the bottom. No one really knows. We're not going to really have the bottom in until we get back over the 50-day moving average and start to build above. All these are just aggressive rallies in a bear market. So in any bear market, doesn't matter what bear market we've been through over the past 100 years, you always have rallies back up to the upside. Nothing is just going to go straight down. You're not going to just see every single daily candle be red. You're not going to see every single weekly candle be red. You're going to get bounces. You're going to get rejections at areas of supply. Nothing has changed. The overall direction is still down. Personally, I would like to see the triple Qs get down into the 260s. If we can get down into the 260s, I think the stronger the recovery is going to be. The longer we trickle around here, 280 and 300, I can't buy it. I just don't buy it because it always leaves the door open for that final hoorah, that final washout to the 260 area before. So anytime we get these aggressive rallies here, it's just hard to trust that the bulls are going to be able to keep their pants on and continue to push this market higher, just due to the fact that, we have such a huge level of macro support down here. And it's like, if we're already seeing high inflation and interest rates and consumer spending slowing down in this event and that event, and we're this close, we came down to 269 and we're this close, why not tag it? Why not test it? Why not lose this area and then recover it to show us that the bulls are still there, that the bulls are still alive? Again, it's hard to trust the rallies when we have such a major key zone here sitting just 4 or 5 points below our most recent lows here. That's why the stock market is going lower. But just from, the next week to 2 weeks kind of price target, if you are sitting short right now, currently the triple Qs is down 2.35% and 7 points on the day. Look for the next stop to be somewhere in the realm of 277 to 279. Take some profits off the table. Again, join the Discord. That link is down in the description box below. Also, comment below that you guys subscribe, and I'll see you guys all next time.